Good morning, traders. This is Perry Wilkie with this is Perry Wilkie with StartupTrading.com. It is 12 minutes till 9 a.m. Eastern Time on FOMC Day, uh, Wednesday, if you can spell it, September 17th. So looking back at yesterday's, I expected a little bit of range expansion yesterday over Monday's session. We did not get that. Like I always say, I've been wrong before, I'll be wrong again. But just contraction up there. I think the Nasdaq had like a 100-point range basically yesterday, and really just nothing to write home about. Um, just kind of going back and forth between these two blocks, right around 660 on the SPY, and in the overnight session, we had hit the call wall for the day at 594 on the Qs, and just didn't even get back down to 590. Got close, but in the RTH session, basically, 593 was the top, and then just oscillated basically between 590 half to 591 half. Just not a lot going on yesterday. Uh, as we look at today, right, big news, right? FOMC is finally going to come out. Bank of Canada is first on deck here at 9:45. They're expecting to go from 275 to 2% on their rate. Uh, and then at 2 o'clock, we're supposed to go from 450 to 425. That's baked in the cake at this point in time, and then really nothing else after that. Powell will be on the mic, but it'll be. Keep in mind the VIX did roll or is about to roll in 10 minutes. Uh, so as we look at what there's a 6% chance that they're going to do a 50 basis point cut. That's not happening, right? It might be fun to talk about on the networks because they ain't got nothing else to do, but quarter points all you're getting. And then if they cut by 50 basis points, you would see the market just tank. You'd probably see the S&P down 400 points if they cut 50 basis points, because the market would just be like, what the hell is going on? And then so you're going to get that quarter point rate cut, and then next meeting another quarter, and then you know, two meetings and then a quarter, two meetings and a quarter, two meetings and a quarter. That's what's priced at now. We'll see how this looks going by the end of next week. We'll come back and revisit that. Since we rolled over, we got untested points of control up here. Yesterday's at 60, 660, 66, 68 half, and from Friday we're at 66.45. So those are where we're at. The Tuesday point of control was 66.70, so all right around here, just high and tight. I would expect at least a partial gap fill. Whether we get the entire gap fill or not, I don't know, but we'd have to go all the way down to from the previous contract in September, we'd have to get on to 65.39 half to hit that point of control. Not that it's off the table, but it's probably unlikely. Uh, what I would look for first is if we can get a just a flash, just a quick uh, jerk down this afternoon at 24,275 basically, or 65.80. Just a quick flash, and it'll probably be, that'll, if it can't breach that and it just wicks that, that's probably where you want to, participate. If we go up first, there's a high likelihood that we could, close down there. So it depends on, at 2 o'clock what happens. A lot of times you'll see a double stop run. So wait, don't even trade after 2 o'clock until the high and the low have both been taken out. Or if you want to, trade reversion, wait till the high gets taken out. And then when we go back underneath the old high, you can try to, short for a scalp if you were so ballsy. Otherwise, the same thing. If you take out the low first, wait until you get back into the previous range and try to buy against that low and just see how it goes. See if sequences develop. And maybe Jack will go over it on his morning show. But you really have to, you can't even be on a 1 minute chart at that point in time. You have to be on a tick chart. You got to choose your tick time frame. If you run and watch sequences from 2 o'clock to 4 o'clock, you can't even be on you know, 1 minute might even be hard to see them at, to be honest. Um, Looking at where we're at, the Russell is at yesterday's high. Nothing else. If you notice, we had some excess in A on all of the indexes except for the Russell yesterday. And we're just at value area low, and value area high. Not a lot going on there. Let's get into positioning going into today. Again, this is the VIX roll. That's why we've jumped up here. If we just look at the VIX itself, we can see uh, where we're at with it. And then, so again, 15 is a major level, and then we'll see if we get to it or not. You can see that we have checked back down to it. Uh, Earlier this week and kind of drifted up away from that. So watch the VIX, and then you might want to have that on there. If the VIX starts getting into some sequences, use that. A lot of times when we have the VIX roll, the VIX can be more technical than the indexes, especially tomorrow or late in the day today. And when it hits its technical levels, the markets will, that's when you'll find the reverses from them, no matter where they are in their sequences. Uh, on the bigger picture. So looking at positioning for today, right? For the Qs, you know, you've got the toss expected moves are basically uh, from 586 up to 597. So that's your range. We've got a pretty good glob of positioning between 590 and 592. So that's your 80-point range in the NQ that again each one of those dollars is 41 points basically. So there's your 80-point range. See if you can press up from 592 up to 595, and then 597 basically above that, or below 590, get that check down to 585 to 586, and that's right around your low of the day. And to be honest with you, I would watch keeping runners to the short side below 587 half. So it's not marked on here, but just keep that a mental note. That's just halfway between 590 and 585, 587 half. See a lot of times that midpoint will be a stall when you're going down. So whatever happens before 2 o'clock really doesn't mean diddly squat except for where people may or may not have their stops. Looking at the cash market real quick, you've got up to 66.60 and down to almost 65.50, right? Quite a bit of range there that can play out for today, and then you know, not a lot. The long-term call wall now is at 6,500, and the or the put wall. I'm sorry, these walls are still. You've got the call wall and the put wall. Uh, Basically right around 6,500. So if we're gonna pin this week, remember this is a large expiration as we're going into Friday. If we're gonna pin 6,500 more than likely, if we're gonna pin. Otherwise, we're just gonna waffle around. We could float anywhere between 6,500 to 6,700. Those are your big markers, and basically we're looking at plus or minus 100 points on S&P 500 between now and Friday's close. So see if we get some range expansions today, which is what we should have. Keep in mind, if we close uh, on the highs or the lows of today with either salmon run trades, meaning trades go off after the bell close, before the session close, or below the low, at that point you get the underwater trades. It's likely that if that can't continue in the overnight session, that you're going to get a complete reversal tomorrow from whatever today's 2 to 4 action is. Again, if you get that pattern, And I'll, when I do my thing, I'll just remind you tonight, when I post those levels, that you're probably gonna start one time framing uh, a little bit again after going into next week, right? Because that's just the way it plays out. Normally, you get a failure of whatever it looks like is going on today. Like if we do salmon run trades, we push up to the high, we would open undervalue tomorrow morning, and we would just start a nosedive down. Same thing as if you open on the if you close on the lows, we would swing up above value area high overnight tonight, and then go off to the races tomorrow. So for a couple days. Usually it's a complete, fake out and wash whatever happens this afternoon. That's why I find it's usually easier to trade tomorrow than it is between 2 and 4 today. You're going to have to be quick, cut your size, see what Jack suggests for your tick chart sequence identification levels and time frames, and I'm sure there'll be a trade school that he puts on this afternoon. For those of you that have never watched him trade FOMC, it's violent and it's quick. So we'll let the VIX just expired. So we have rolled off of it. Those contracts are settling now between now and the closing or the opening bell. So again, for just profile wise, below 472 or above 560 is what you're looking at. Above 66.75 is really where you want to see if you can maintain, right? Again, putting back above there and falling back down into the range. So if you're going to do that 2 o'clock to 4 o'clock trade, again, watch the range going into that. Watch the stop runs and the complete reversals. Usually you'll take both of them out. It doesn't mean you will today, but you got a quick risk to reward if you go above the top of the range, come back in below it. You're just shorting against that previous high with a target at least. You do halfway into the range, do the 61.8, and then just leave runners for the bottom of the range, and just try your stops because it could just be something that grabs as well. And the opposite is true for the bottom of it. That's usually the best trade right at between 2 and 3 o'clock. I hope this helps. You guys have a great day, and I will talk to you tomorrow. We'll see what Jackson.